Boa tarde a todos, meu nome é Will Landers, do BTG Pactual Asset Management. Hoje nós temos o grande prazer de ter o Mark Mobius conosco. A apresentação vai ser em inglês, mas nós teremos em poucos dias uma tradução disponível para aqueles que preferem escutar em português. Vai estar no YouTube. Eu vou mudar para inglês agora. Good afternoon, everybody. It's great to have you all here from around the world. My name is Will Landers. I am the head of equities for BTG Pactual Asset Management. With me is Fabiana Arana, also a partner at the bank and one of our great salespeople on the equity desk. But more importantly, with us today, we have the great pleasure of spending the next hour speaking to Dr. Mark Mobius. Many of you know he's one of the most experienced emerging markets investors in the world. He started Mobius Capital Partners in 2018 after spending a successful 30-plus year career with Templeton, where he grew that business to over $50 billion in assets, focusing on emerging markets around the world. Dr. Mobius received his PhD from MIT, but also studied at Boston University, University of Wisconsin, Syracuse University, Kyoto University, and the University of New Mexico. He received many awards during his career, most recently being named a Lifetime Achievement Award in Asset Management from Global Investor magazine. In addition, he's published many books. Many of them are must-reads for all of us who are emerging markets investors. But the latest book, Invest for Good, A Healthier World and a Wealthier You, tackles the issues around ESG, something that's very close to all of us who are tackling the complex situations of trying to be a conscientious global citizen while at the same time maintaining our fiduciary duties to our investors. Well, Mark, thanks very much. Good evening to you, and thanks for joining us from South Africa.
It's a pleasure. Nice seeing you.
Fabi?
Yes, Mark, well, summarizing Will's, amazing introduction, you were basically a legend. So thanks again for being here with us today. And thank you for the partnership with BTG Pactual over the last years. And just a reminder, we, BTG, have the exclusivity on distributing Mobius capital partner funds in Brazil. And so let's go for the... Thank you. Thank you.
My book, and also working with BTG Pactual, which we've known for many years. We really appreciate your cooperation.
No, we are very, thank you very much to you. And so let's go to the first question, Mark. We have gone through many crises, right, globally and in emerging markets. We had 97, we had 94 first, then 97, 98, the internet bubble, we had 2008, and now we have something like unthinkable. So how do you rank the coronavirus crisis among, the others, the many ones that you have seen in your career?
This is really a very, very big crisis because, first of all, it covers the entire world. As you know, previous crises started in one country and then gradually spread. But this time, it's a sudden and very dramatic coverage of the whole world. More importantly, the way governments are reacting to the crisis is very, very striking and probably unprecedented in the whole world that we've seen since 1987. In fact, I've been looking at all the crises, all the bear markets since 1987 in 11 markets around the world, including Brazil. And what we found is that the average decline is about 50%. But of course, the range can be anywhere between 21% to 70%. And these crises or bear markets last for about a year and a half, 1.7 years, that range. So we are now at the beginning of a very, very big bear market. Of course, many people ask me, are we at the end? Are we at the bottom? And of course, it's impossible to know that. But we do know that these bear markets last a little less than 2 years, and they're always over. So, we used to say the most expensive words in the world are this time it's different. And this is no different than any other bear market. The only difference is that it's more sudden and more dramatic.
Mark, when you look at the responses from different governments from around the world, are there any that stick out to you as doing a better job than others? What do you think would be the right response from, especially when we look at an emerging world that has, in many places, less of a fiscal cushion to deal with than in a place like the United States?
Well, you have to look at China. They obviously have done probably the best job. Of course, that the coronavirus started there, but they moved very quickly. Being a mandated society where the government can crack down in every direction and can move very quickly without having to go through any kind of legislative process, I would say that China has probably done the best job, not only in containing the virus, but also in taking care of the financial aspects, the economy. Of course, democratic countries like Brazil or the US and other countries around the world find it very difficult to take that kind of draconian measure. But I would say that you have to point to China as being probably the most successful. And if you look at the decline in the stock market in China, you'll see that it's the least of any of the major markets around the world.
That's true. And Mark, at this time, we have not only a crisis on the demand side, but on the supply side as well, right? So how do you see inflation going forward, global rates? Can you talk a little bit about that, please?
Well, the wonderful thing about this modern world is that, in fact, we are in a deflationary environment because with technology and with the improvements in living standards and the way people operate, we are actually seeing, in real terms, declines in prices. So, in some ways, the central banks are pushing on a string, so to speak. They're hoping to reduce inflation, prevent inflation by using various monetary tools, but in fact, they don't work. So the decline in interest rates, which normally would lead to inflation in view of some people, is not going to happen in my view. We are in a completely different environment these days, and the central banks have very, very weak tools to change it.
Yeah, what we've seen is that, while central banks are trying to do what they can, and like you said, in many cases, it is limited, you're also seeing central governments doing a lot to try to at least alleviate some of the pain from this recession. I mean, we have some 40% of the population sitting at home, quarantined or in lockdown mode. And this is meaning trillions of dollars in the US and billions of dollars in most countries of stimulus packages that at some point are going to have to get paid for. What do you think of, what are your concerns regarding the size of these packages and how, future generations are going to have to deal with that?
Well, I think the lockdown is probably going too far. The governments around the world are locking down the economies to such an extent that it will be difficult to see a recovery. And of course, the impact on companies is tremendous. Because if you have a situation where, for example, you're running a retail chain and you cannot open for a month, this has a very, very big impact. And of course, unemployment figures, as you know, are going through the roof. In the US, we've gone from almost no unemployment to an incredible number. And a lot of people are asking for help from the government. And of course, the government is responding. Governments around the world are responding with trillions of dollars, which eventually have to be accounted for either through more printing of money or through some kind of measure which is going to be very drastic. So I would say that the lockdown is not a very good move. And in fact, I would say the cure is worse than the disease, so to speak.
So if I could just go follow up that. So it sounds like you're on the vertical camp versus the horizontal camp, the full lockdown, in terms of a better response. Because obviously that's a huge discussion in Brazil, in the US, and in other places as well.
Yes, I think there has to be if you will, a vertical response in the sense of pinpointing those areas where you have to do a lockdown, but let the rest of the society move ahead. So, for example, if you are able to get enough tests going and enough people tested that are positive, they can go to work, and then you can have the economy at least operating to some extent. Right now, the economies around the world are in lockdown, and it's very, very damaging in many directions. in the sense of psychological impact, sociological impact, and most important, of course, the economic impact.
Yeah, absolutely. Yeah, when we think that most of the decision making guys, people, businessmen, they are operating under this lockdown is something really amazing to think about. And Mark, when we go to Asia, Europe, we are ahead, and US. How do you? What should we be adopting or doing differently from those countries? They are ahead of us, so what should we be doing?
Well, I wouldn't say necessarily they're ahead of you because there are still lots of problems in a number of these countries. I don't know whether you've been reading. Singapore now has announced that they've discovered even more cases. Of course, some of this is because of better testing. But I would say that the lessons that we can learn from Asian countries is, of course, to move very quickly, to identify those people who are infected, and then isolate them, because this is what the Chinese have been doing. So, but I wouldn't copy the total lockdown measures that have been taken by other countries. I think these measures are a mistake, and it's better to use, so to speak, a rifle instead of a shotgun.
I see. Yeah, because some people have been saying that if there is any good thing about this crisis, is that it has a beginning, a middle, and an end, right? Do you agree with that statement? Are we at the middle or at the end? And what are your thoughts on potential new waves of the corona, right? You just mentioned Singapore, China, for instance, where the reported infection rate only affected a small number of the population. I remember, right, the Spanish flu, many people talking about the Spanish flu last century, that happened in a very severe way in the second wave, right? Was even worse than the first one. So what is your view on a second waves going forward?
Well, I think the first thing you've got to remember that being infected does not mean you're going to die. In other words, in our bodies, we have thousands of viruses. They live in our body. We are hosts to many, many germs, which many of them are beneficial to our bodies. So one of the first mistakes that people make, I believe, is they say, oh, we have 3,000 infections. And they mistake that to think that these people are going to die. A very small percentage of these people will die. And of course, the other factor is that a lot of the deaths that are counted are not necessarily deaths from the virus, but from other illnesses that were pre-virus infection, if you know what I mean. In other words, people had heart disease, people had kidney problems, so forth and so on. And then after they die, they test them for coronavirus and they discover, oh, they've got coronavirus. But they didn't necessarily die from that. So I think it's very important to look closely at the statistics to find out what actually is happening. Now, in answer to your question, are we in the middle, the end? Where are we? Well, I believe that we're at the middle, but we're moving very quickly towards the end. The reason why I say that is that there are a number of new drugs that are being developed, and in fact, some old drugs that are found to be effective against the coronavirus. So this is going to be a very important factor in lowering the death rates for people that have contracted the coronavirus. In addition, you must remember that this virus will be with us for many, many, many years. And many people have already contracted the virus and have built up resistance to the virus. So this will spread gradually throughout the entire world. And you'll find most people will be diagnosed as having the virus, but have already conquered the virus in their body.
Well, thanks for that, Mark. I think we could change subjects a little bit, otherwise we're going to sound like CNN, and all we're going to talk about is the coronavirus. So why don't we talk about Invest for Good, your latest book. which is touches on ESG. As I mentioned in my introduction, a topic that's very dear to most investors today who are trying to work on that thin line between being a fiduciary to their investors, but at the same time being a conscientious global citizen. Let me just give you a chance to give a little introduction about the book, how it came about, and how throughout your career you've used these topics.
Yes, over the many years that we've been investing in emerging markets, we discovered that very often when we found companies that had good corporate governance, they also were very good in dealing with environmental issues and social issues. Of course, when we started in 1987, it wasn't called ESG. It was just called risk control, so to speak. In other words, if we went to a company, if they were polluting the environment, that was a risk. It was a business risk that we had to consider. But then over the years, we discovered that those companies that had good corporate governance, in other words, had independent directors, treated the shareholders well, etc., all these good corporate governance practices, those companies perform better. So we decided that it's a good idea for us to account our experience in that regard. And in the book, we give many examples of where the corporate governance was good or was improved as a result of our persuading the companies to change and improve their corporate governance. And we saw the performance of these companies getting better. So it was sort of a win-win situation. That's the reason why we named the book Invest for Good, because if you do good things in terms of corporate governance and, of course, the social and environmental factors, then your investment is going to be good and your shareholders are going to be happy.
Yeah, I think one of the topics, I mean, we've been doing a lot of work as a BTG Pactual to try to incorporate more and more ESG in all areas of the business. But specifically in the asset management division, we've always, like you said, it's always been part of fundamental research to talk to these companies and understand how they are. And governance was always one that was somewhat easier to judge. But I do know, I have seen that you said that governance is also one of the more important ones, especially in emerging markets. Maybe you can talk about that, but also, how do you rate the companies? Because what we found as well is that there are a lot of rating companies out there. They don't seem to have a standard. When we speak to the companies, they beg us not to have our own rating system, because otherwise they're going to have hundreds, if not thousands, of investors sending them questionnaires. So what's the medium term there in order to make this a good tool for investors, but also make something that's accessible for the companies?
That's a very good point. As you just stated, there are a number of rating agencies who will rate companies on ESG, environmental, social, governance factors, and each of the rating systems is different. So it can be confusing to companies. But what we do is we try to take a more practical approach. We try to go into a company and say, look, you're a family-owned company, for example. We realize that you have members of the family on the board of directors. That's fine. But it might be a good idea to get an independent member in there to give you some new ideas. So that's the kind of thing we will bring into the picture to generally improve the situation in terms of governance, and of course thereby impact the environmental and social. But there is no really one standard, and I recommend that companies really develop their own, but based on the UN principles. The United Nations has a list of principles that you can follow. It's sort of a checklist. And if you use that checklist, it's a good guide to begin to see where you're deficient and where you can improve. But each company is different, and it probably is not fair to use one single standard for every company.
It's interesting, Mark, because just a related subject, right? Talking about the sharing economy and ESG. The society was going through a change in culture, habits towards a sharing economy model, right? The Ubers, the Airbnb, sharing offices, sharing bicycles, scooters, more rental, less, purchases. From now on, and that is something that was coming from the millennials, from the new generation, like the young guys in the office, they do not have cars anymore. They just want a Uber or rent a car. So that was a trend that was in place, and those habits might change with a greater emphasis on hygiene standards, greater awareness of personal space. How do you see that impacting business globally? And that, will definitely relate to ESG as well, right?
Yeah, it's just amazing what has happened technologically globally. And this is what I meant when I said, actually, we're in a deflationary environment because just take what Uber has done to transportation to enable us to travel cheaply, efficiently, and easily. And then just take what Google has done in terms of information flow or any of these services on the internet. It's just amazing what has happened, giving us a better standard of living, better information flow, easier to communicate with other people. And of course, this crisis is probably a good indication of the impact of this technology, because just like we now are having this conversation, very clear video, very clear audio. You are sitting in Brazil, I'm sitting here in South Africa. We can converse. It's just incredible. And we can do it very cheaply and easily. So, as a result of this pandemic, I believe the technology impetus is going to be even greater going forward. In other words, people are going to be using video conferencing more, distance learning more, and that sort of thing. And I think it's great. It's a tremendous achievement from a technological viewpoint. And of course, if you look at the stock market, you'll know that those companies that are involved in internet technology are going to do very well because of the tremendous demand that's been generated as a result of this pandemic.
Yes, and Mark, the impact on traveling, people afraid of taking a plane, people afraid of staying in a hotel room, afraid of going to restaurants. How do you see businesses, in that environment?
Many of these businesses are in deep trouble. I mean, you can imagine the airlines are in deep trouble. Hotels, in this hotel where I'm staying, maybe there must be 5 or 6 people in the whole hotel. Can you imagine? And it's a beautiful hotel. They've got a beautiful grounds and so forth, and they're charging me something like $30 per night. So this is what's happening. It's a terrible situation for anybody who's owning a hotel or an airline or a travel agency, et cetera, et cetera. But it's not all lost because, as I mentioned, telecoms companies are doing well. Many of the internet companies are fine. Okay, they'll have some lower advertising, but generally speaking, they're doing okay. So there are many industries that will be in trouble as a result of this lockdown.
One of the topics that had been in the news before the pandemic was obviously the trade war between the U.S. and China, and the impact that could potentially have on globalization. I think this pandemic has actually increased the concerns that globalization may be going the other way, or at the very least, companies are going to be thinking twice before deciding to have their whole supply chain coming from one part or the other part of the world. Also, there's always concerns or talk, especially in the tech world, about creating 2 different avenues, one US-led, one China-led. Kind of like for those of us that can remember the VHS versus beta discussion for VCRs, we're going to end up with something like that in a lot of different sectors, a lot of different technologies, with China going one way, US going the other, and the world having to decide which side they're going to be with.
I think that's the $64 question, in the sense that China definitely is moving from a political viewpoint, from an economic viewpoint, from many technological viewpoint. They're moving in a different direction than the US in many ways. And in a way, it's sort of an ideological battle, because China is saying, look, if you have a one-party state like we have, you can get things done much faster. You can have a much more secure society. You can have cameras all over the place so you can identify criminals, etc., etc. But then from the US point of view, they say, oh no, we don't want that because it'll destroy our democracy and so forth. So this is really a big, big issue that is going to be with us for quite some time. And I believe that as a result of that, this kind of, might we say, conflict, the globalization will continue and actually expand. Because as you know, China is expanding all over the globe, giving loans to countries all over in Africa, here in Africa, in Latin America, all of Asia, and they're expanding to become a global power. And of course, the US is going to look at that and realize that unless they move, they also have to be involved on a global basis. So despite what many people think about the Trump administration, I believe that the administration will want to be a global influencer any place in the world. So I don't think globalization is dead by no means, simply because of the incredible communications revolution that's taking place. And of course, if you look at the coronavirus situation, we really need to cooperate in finding vaccines and finding new medicines, and that's a global effort.
Thank you, Mark. Now, if we can talk a little bit, about commodities. On top of this black swan, we had another little black swan, right? That was the issue with Saudi Arabia. So how do you see, the resolution to this crisis in the near term? What that look like? What's going to be the outcome of that?
Well, there's no question the demand for oil, for petroleum, is not going to decline anytime soon, because you have these huge populations in India, in China, that are increasing their standard of living and will want to use more petroleum for even if they go into electric vehicles, they will need petroleum for many, many other purposes. So I believe the demand for petroleum will continue, maybe not rising as fast as it did in the past, but it will continue. And with this decline in price, of course, it's been beneficial for a number of countries. China, of course, is a big importer. India is a big importer. There are a number of countries that will benefit by the low price. Brazil, I think, is sort of in the middle. Brazil imports, but they also export to some degree. So it's a big question mark in terms of what Brazil will do. But I believe that generally speaking, for most of the emerging market countries, a lower oil price is beneficial.
I see.
Yeah, there was hope that they were going to have a discussion on Monday. Apparently, they got delayed due to some political issues. A discussion between Saudi Arabia and Russia to try to come up with some type of resolution, or at least resolution to this crisis that they added to this global crisis. The news over the weekend, apparently this is going to be delayed. On the U.S. side, obviously the shale industry got hit hard by this drop in oil prices, being one of the highest debt issuers in the country. What do you think is going to be the balance? Are we going to go back to a place where the U.S. becomes a net importer again, or we can come up with a solution where the U.S. continue to be sufficient in oil production, but oil prices will be low enough that countries in emerging markets, like you mentioned, that there are importers, will benefit from this lower oil price?
Well, I think there's no question that the shale producers, many of them will be in big trouble, because at these prices, they can't make money. Not all, but a great number of them will be in trouble. And of course, as you know, many of them are heavily leveraged. So unless the government comes in with some help, you'll see companies go bust. But I believe the U.S. will continue to be an importer. As you know, the U.S. is an incredible consumer of petroleum, so they have to continue importing. But if prices stay where they are now, then there will be probably a decline in production in the U.S.
Thank you, Mark. And if we can continue, on commodities other than oil, what is your view? China has for years been the biggest buyer of commodities, and this return to activity following their lockdown, they are doing the same. They have been buying commodities, right? So what is your view on major commodities other than oil?
Well, all these commodities will have problems if you look at any of the commodities, with the exception of a precious metal. Gold, I think, will continue to be very good. Silver, of course, will follow gold to some extent. Palladium, platinum will do well. But if you go into some of the other commodities, because of the lower demand, prices will, of course, come down. But going forward, once these economies recover, then you'll see the commodities come up again. So I find many investors are looking at commodities closely to see if they can pick up low prices of these commodities in the expectation that in 1 year these prices will go up again.
Thank you, Mark.
We're going to talk about markets, equity markets a little bit, but I'm just curious, in your funds today, what's your position with energy as well as with material stocks overall?
In our fund, we don't have any energy stocks, and we don't have any direct commodity stocks. In other words, mining companies, we don't have. Mainly because some of these companies have significant environmental issues that they have to correct. So this is one of the big issues that we have to look at. But in our portfolio, we're not in those areas.
Yeah, I'm glad you mentioned that, because I was going to ask you whether it was a view on the specific commodity or on oil, or was it the ESG filter coming through that forces you not to invest in these companies at this point because they're not meeting the minimum standards that you would expect from an environmental standpoint, or social in some cases.
Yes.
Okay. And just if I can just do a follow up on that, then on the food side, I mean, a lot of Brazil has a big protein producers that are also and at times in trouble with some of the ESG rating companies because of the production chain that they have. What's your view on food safety on these large food producers, and where do they rank within your own ESG rating system?
Well, it's interesting because we always thought of food producers as being pretty clean and pretty good on their environmental, social issues. But then when we dig a little bit deeper, we find that they're using chemicals which are harmful. They're using additives to their foods which are harmful to human health. And they're, for example, if you take sugar is a big problem from a health point of view. So this issue and this whole space is changing very, very rapidly with new discoveries regarding the impact of various foods on people's health. So this is a space to watch very carefully. Now, as a result of this shutdown, many industries, of course, are having shortages in some areas, but generally speaking, the food companies are doing fine because the governments around the world, even in the lockdown, are allowing sales of food, and food shops, grocery stores are kept open. So some of these food producers will probably do okay going forward.
Interesting, Mark. Interesting. Thank you. Talking about valuation for equities, Mark. Emerging markets valuation now versus other crises. How is valuation now? How can we compare today to other bottoms? Is there further downside? How are you viewing that?
The big issue, the big problem we have in looking at valuations is the relationship to interest rates. For example, when interest rates were 5%, we would say, okay, we can tolerate the reciprocal of 20 times earnings. But when interest rates are 1%, then you can tolerate 100 times earnings, if you know what I mean. So as a result of these low interest rate environment that we've seen in the last almost 5 years or more, the traditional price earnings ratios and some other indicators were not very useful. So what we have to look at is return on capital, dividend yield, et cetera, some other indicators. And using those indicators as a result of this downturn, there are some very good bargains in the market. Now, I'm not saying we're at the bottom. We could see further downsides. I mentioned the average is about 50% decline. And most of the decline in most countries, of course, Brazil, I think, is since January about 38% down. But most of these other countries are down 25, 26, 28. So if you look at that average, the long-term average of 50%, then we have to ask the question, are we at the bottom? Do we see a good value? And what I'm advising people to do is forget about the overall market, but look at individual companies and see which ones are really good value at this stage, and do some switch from those things that were, that were expensive before and now are cheap and are good quality, switch into those and get out of those that are not very good value, based on, the indicators like return on capital, dividend yield, and so forth.
This is specifically interesting here in Brazil, Mark, just because, as you know, Brazil is a poor country, quite different from China, Europe, US. Brazilians have very little savings. 50% of the workforce is informal. So as a result, it's very difficult to forecast here what's going to happen, right? To GDP, the government is trying to be fast, trying to flow money into those 50% of the workforce that is informal, but it's not easy. So it's been a challenge to everyone to anticipate what's going to be the drop in GDP. Like a week and a half ago, we were talking about 1.5 drop for Brazil. Now some people are talking about 5 or 5 plus drop in GDP this year, and could be even more, right? So I totally see your point on quality companies and other metrics, because it's really being very difficult to forecast growth and what's going to be of the results of the companies in the short and medium term.
Yeah, there's no
Mark,
question.
Sorry.
Yes. And it's not only Brazil, don't forget, if you look at the mass of Americans, many of them don't have any savings. This is the real issue in America, as you know. The gap between the rich and poor has gotten wider and wider. So Brazil is not alone in that respect. But I would say all countries around the world, as a result of this shutdown, are going to have a decline in GDP. Maybe the growth rate will be still there, like in China, they'll still have growth, but it'll be much, much lower than expected. And in many cases, countries will actually have a contraction, a decline in their economies. So, but that does not mean that all the companies are going to go bankrupt. There are some companies with strong balance sheets that will be able to increase their market share after all this is over. And as you know, life goes on. The government could have problems in collecting taxes and problems with the informal economy. But at the end of the day, people need to eat, they need to travel, they need to enjoy themselves. And so the companies will survive.
Yes, and just a quick follow-up question on that one, Mark. Sorry, Will. No, I was just going to ask about Brazil. If you are overweight Brazil now versus the other emerging countries, how do you see Brazil versus the other emerging countries now?
We see Brazil as being cheaper than many of the other countries. In our portfolio, Brazil is the third largest. We have China, India, and then Brazil as the most largest portions of the portfolio. So we see a lot of incredible companies in Brazil that are going to do very well going forward, and that are very cheap now.
That was going to be that was where I was trying to go, Mark. The problem with being a public figure like you is that there's a lot of interviews out there that you've given over the last few weeks. So I got a chance to look at some of them. In mid-March, you were talking about India and Turkey as being some of the interesting markets, and I think it was more related to the oil price coming down. India, obviously, with other things as well. Earlier in the week, you were talking about perhaps we're getting closer to a and then you guys were adding to positions. In the meantime, obviously, the situation in the U.S. Has picked up with a lot more deaths coming through, unfortunately. So how do you see we're going to get out of this? We know that the equity market is going to be ahead of the actual crisis. We started to price in the solution ahead of time. And I think to Fabiana's point as well, on economic growth, we all know we're going to have a recession, a global recession. The question is going to be is how short is it going to be? And by the end of the year, which countries are going to be already on a rebound, on more of a V-shaped rebound than an L-shaped rebound, which obviously wouldn't be good for equities. So I know there's a lot of stuff there, but how do you look at it, and how should we be looking at the markets going forward?
I think definitely by the end of the year, we'll be out of this. There's no question in my mind on that. In terms of V-shaped or U-shaped, I would say that it's probably going to be U-shaped. If you look at the stock markets around the world, almost all of them have jumped up from the bottom that we've seen, about 10% or so. We've seen this sort of reaction upwards. Now, that doesn't mean that we've already reached the bottom. Usually you have a double bottom, you can go down again and then gradually come up. But my feeling is that, first of all, people around the world are not going to tolerate a shutdown more than 1 month. I believe that you're going to see lots of objections and problems. In fact, in Italy, if you look at the situation in Italy, in the south of Italy, where many people are in the informal economy, there have been riots against the shutdown. So I believe that there will be increasingly pressure on the governments to open up and allow the economies to function. And as a result of that, we'll see recovery. Now, aligned with that, as I mentioned, I believe you're going to see better treatment for the coronavirus. For those people who get ill, there'll be new drugs available and existing drugs that are now testing. They're finding that they're working to help people. So the combination of these things will mean, I believe, that by a month or so, you're going to see a recovery beginning to take place.
I see. Mark, any specific sector or sectors that you like for Brazil?
Well, obviously, anything related to communications, anything related to the internet, where you have internet sales, etc. And by the way, that doesn't mean that you just go to internet company, but to companies that are using the internet to continue to operate. But what we're doing is, instead of looking at the obvious ones, we're looking at those companies, let's say in the education area, that can still function and use technology. Even in the retail side, those companies that are able to sell using the internet are good companies to look at. So I would say those two areas are most interesting at this stage of the game. And of course, anybody involved in pharmaceuticals and medicine, medical testing, for example, hospitals, etc.
Thank you.
One of the questions that I've seen people ask is are there any buys of a lifetime? I mean, there's markets come up so much, in some places more than others. If there was one asset class that I should be looking at, not a stock, but an asset class or a country, is there a buy of a lifetime right now, Mark, or is it too early to tell at this point?
There are many buys of a lifetime, depending on where you want to be. Of course, you've got to be diversified. Everybody should not have their eggs in one basket. And that goes for Brazilian investors. You got to diversify globally. And I would say right now, for global investors, there are some multinational companies listed in London, New York, particularly in New York, where the prices have come down to unreasonable levels. And many of these companies are making a lot of money in emerging markets. They're global investors, and they have a lot of their earnings outside the US. So I would say it would be a good idea to look at some of those companies.
Perfect. Mark, just a question on something that, you know, we had, I don't know how many years ago, but now the Brazilian real versus the other currencies, we can say that Brazil had like a maxi devaluation in the quarter, right? 30% plus. So what is your view? And looking that it's going to go higher. So when we think about the currency and we go to take a Uber ride, or we go to a restaurant, or we go anywhere, it really looks like the real is cheap. But what is your view?
That's true. It's come down a lot and it's cheap. And whenever you have that situation, you're going to end up with more visitors coming in. You're going to be able to export more, and it'll be very good for exporters. But you must remember, if you put this in perspective, a 30% devaluation against the dollar is not that bad when you look at the history of Brazil. You know, I remember investing when there was 2,000% inflation and devaluation. Well, they didn't even have a devaluation. It was the new currency all the time. So we're in, I believe, a much more stable environment in Brazil. So we shouldn't get too excited about that kind of devaluation as long as there's a stable central bank and willing to allow some freedom of movement of the currency. You know, one of the good things about the current environment is that central banks are allowing flexibility in the exchange rates. That's very, very important. In the past, they tried to control the exchange rate and it was disastrous. And they used up all their foreign exchange as a result.
Thank you.
One of the questions that came up from a couple of different of our listeners was in regards going back to supply chain and globalization, and how does Latin America fit into that? Obviously, Mexico has been one of the biggest beneficiaries of the NAFTA and now the USMCA agreement being signed, and that's been one of the few growth industries that we've seen in Mexico. Do you see that this situation with China will help increase even more a shift towards Mexico? Are there other countries in emerging markets, other than Latin America or elsewhere, that could benefit from the shift? And would this even be a time for Brazil to start growing and become more integrated in the global supply chain? Brazil's been a very closed economy forever, but with a more competitive interest rate, the reforms that we've seen from the administration, can Brazil start to insert itself in this global supply chain in a bigger way as well?
Yes, you must remember that China is moving away from high labor input products. They're moving more towards technology products, cell phones, switchgear, et cetera, et cetera. And so a lot of these countries around the world, like Mexico, like Brazil, many of the countries, of course, in Asia and Southeast Asia, are picking up some of these industries. In fact, it's interesting to know that many of the Chinese manufacturers are moving to these countries because they realize that their worker wages are going up too much and they're not able to continue to manufacture in China. So I think it's going to be important for Brazil, Mexico, and other countries in Latin America to invite some of these Chinese manufacturers to come in and establish factories so they can utilize the labor in the country and some of the raw materials. So I believe that many of the emerging market countries are going to benefit from this change. And of course, the US trade war, of course, is pushing this along.
Thank you, Mark. Now, just another quick subject here in regards, you know, with regards to Brazil. Single-digit rates, right? We have now very low rates environment in Brazil. For the first time, in a sustainable way, we see rates at 1 digit. Middle classes invest money in equities for the first time in Brazil, in a broader way. This is quite really, Mark, a new experience for Brazilians. And the recent correction was huge. The alternative for the middle class and individuals for Brazil continues to be low rates, and very low rates, I would say, Selic below 4, very different from other crises when rates were much higher, right? Any lesson from other emerging countries on how those individuals will behave from now on? And just important to say that we are not seeing, funds in Brazil, they are not seeing outflows yet, equity funds, I mean. Any lesson, to learn from you?
Yeah, what we've learned from the US and from Europe, particularly the US, is that the retail investors are very what we call sticky. In other words, they tend not to sell and buy often. Of course, there's some speculators, but generally speaking, the mass of the population buy and hold. And I think that you're going to see that in Brazil as well. In fact, as you mentioned, you're already seeing that in Brazil. And the other trend I think that Brazil will follow is, as you mentioned, more and more people buying equities instead of putting their money in the bank. In the US, the same thing is true. Almost every American with money, with any kind of savings, has some exposure to the stock market, either directly by investing by themselves or through their pension funds and mutual funds. And as you know, the ETF business in America has exploded. So I think you're going to see the same thing in Brazil. You're going to see a mass of retail investors investing in mutual funds, sometimes making direct investments in stocks, and tending to hold on because they realize that at the end of the day, investments in stocks is a way to get an income through dividends, but also to beat inflation if inflation comes back.
Yeah, one of the concerns I had with that is that the timing was unfortunate for a lot of our investors in Brazil. Rates came down throughout last year, came down further this year because of the crisis. With rates going down to levels that none of us expected to see so soon, the retail investor who was used to just investing in savings accounts, very safe, or in government bonds, moved into the equity market throughout last year, saw some gains towards the end of the year, and then saw the massive decline. You mentioned before about diversification, but how do you think these investors should look at this market opportunity at this point?
I think for the Brazil investors, it's a great time to get invested in Brazil. It's a good time. I'm not saying they should throw everything into the market, but let's say if they have 100 reais, put 50 in the market and keep 50 to see what happens. If the market goes down further, then they can buy more. But I would say now is a wonderful time for them to be investing in good Brazilian companies with strong balance sheets that pay dividends, that have a good return on capital, etc. And there are many of those in Brazil.
And Mark,
you mentioned
when
that
you say
in your fund. Sorry, Fabi, just to follow up on that. You mentioned in your fund that Brazil is the third largest position today. So I'm assuming it's an overweight versus the bench position in the index. From a global investor standpoint, and I got that question a lot as well. Given all the noise around the Brazilian government and lack of focus on it, so the good things which we see, which are coming from the economy ministry and the reforms, but now with the real at 5 or 5.25, 5.30, how do you think Brazil looks to global investors? And are you seeing people as you travel around the world wanting to hear more about Brazil and agreeing with your position of having a big position in Brazil in your fund?
Well, I think you've got to differentiate between the retail investors and the professional investors. I would say for the professional global investors, Brazil is attractive and they're going to be wanting to put more money into Brazil going forward. For the retail investors sitting in America, yes, they may buy a Brazil ETF or they may buy a Brazil fund, but most of them will not directly invest because they have problems with getting the foreign exchange, et cetera, et cetera. But I would say that the professional investors, the pension funds, the large mutual funds, the ETFs, they will definitely be putting more money into Brazil.
I see. Mark, a question that came, from the chat. Ask him about Mexico and production chains integrated to US.
Yes, there's no question that Mexico is going to be benefiting from the China-US trade war because more and more production will go into Mexico. And the US-Canada-Mexico trade agreement will accelerate the trade, I believe, between these countries. Because at the end of the day, US manufacturing companies need Mexico as a source of lower cost production. And it's very, very convenient when you can ship in 1 day or 2 days parts that are needed in America from Mexico. So I think Mexico definitely will benefit from this trend going forward.
Thank you, Mark. And I think we are, getting to the end. Would you have any final consideration, Mark?
Well, I just want to say to everybody, keep, as you say, keep your chin up, be happy, be healthy. Don't worry about this coronavirus. It will be gone eventually, and we'll be able to return to normal. And next year, I'll be able to return to Brazil and enjoy Carnival.
Yes, we all
That's
know
great.
you like it. Will, please.
Well, Mark, thank you so much for being with us tonight. On behalf of BTG Pactual and our listeners on YouTube, not only in Brazil, but around the world, we thank you very much for sharing this hour with us and sharing your views. And I wish you a good stay in South Africa and to get to go home at some point soon. Thanks, everybody, for listening. This was our first live on YouTube in English, and we hope to do more of these. Thanks again, and have a good afternoon, everybody.
And Will, just a final comment before I forget. Early in the week, we are going to have this live, translated to Portuguese, as you said in the beginning of the live. So I'm just repeating that. Earlier in the week, we will have the translation, okay?
Wonderful. Thank you very, very much. It's a pleasure being with you. Thank you.
Mark, thanks again. Thank you.
Okay. Bye-bye.
Good night.